What's up YouTube, Tim Layton here, and welcome back to my YouTube channel. If you're new here, thank you for coming, it means a lot. So today we're going to be talking about Facebook, or Meta, and why it's been crashing, and whether this is going to present a really good buying opportunity, or whether this is a bad sign of what's to come in the future. So stay tuned, we're jumping right into it. Alright guys, well before we jump into what made it crash, I want to put a little PSA out there. That I will be calling Facebook Facebook, and I will not be calling it Meta. Because in my opinion, Meta is just a pipe dream for them. They are Facebook. That is what they are. If one day the Metaverse is what starts making them all their money and they are the kings of the Metaverse, then yeah, I'll call them Meta. But for now, they are Facebook. That's what they are. Now anyways, all that said, what made them crash? What happened in the last 3 days to plummet the stock? I think at the time of this recording, 26% from Wednesday, and I think it's down 36% from its all-time high like 2 months ago. So what happened? Well, from the all-time high, the stock market just hasn't done well. I mean, that's what caused them to drop from their all-time high. It's just the stock market has not been doing well with inflation and interest rates and COVID and all of that. So that's nothing to be concerned about. But what's happened in the last 3 days? Well, their earnings came out, and we're going to jump right into that. Because at first glance, it might not seem too bad, but I promise you, it's not looking too good. Alright, so jumping right into the fourth quarter Facebook earnings. So if you look on this chart here, this is in millions of dollars. This is not in dollars. So if you look at their total revenue, it says 33,671. That is 33,000 million, meaning 33,671 million. So first things first, let's look at their revenue. You'll see that in the fourth quarter of 2021, they made $33 billion, compared to the fourth quarter of 2020, where they made $28 billion. Now that is a 20% growth. And again, at first glance, you might think that looks pretty good. But let's look one line down, look at total costs and expenses. In the fourth quarter of 2021, Facebook spent $21 billion compared to the fourth quarter of 2020, where they spent $15 billion. Now that is a growth of 38%. Now that is something you don't want to see grow. That is the one category here that we wouldn't mind seeing a negative percentage on. They spent 38% more money in the last 3 months of 2021 than they did in 2020. Now we're going to get into what they spent that on in a minute. But so if we look down here, income from operations. Now what that means, the income is just the revenue minus the costs. So in the fourth quarter of 2021, they made $12.5 billion. But in the fourth quarter of 2020, they made $12.7 billion. That is a loss of 1%. This company is supposed to grow. They're supposed to be growing. They're supposed to be huge. And in the last year, they've actually made 1% less than they did the year prior. So that is already a really bad sign. Now on top of that, we look at their operating margin. All that means is the percent of their revenue that they get to keep. In 2020, they got to keep 46% of the money that they made. Now this year, the fourth quarter of 2021, they're only keeping 37%, meaning they're losing 9% of their profits. That's another bad sign. Now, if we look at their effective tax rate, that's something that's not their fault. That's just something that happened. Their tax rate went from 14% to 19%, and that did bring their income down. But in the fourth quarter of 2020, they made $11.2 billion. In the fourth quarter of 2021, they made $10.2 billion for a loss of 8%. And their earnings per share, again, fourth quarter of 2021, they made $3.88 per share, as opposed to now $3.67 per share. It's a 5% loss. Now again, this is bad news. Facebook's supposed to be a growth company. They're supposed to be growing, getting larger, making more money. That's what people expect from Facebook. And in the last year, and by almost every metric, they have lost more money. So let's jump into how they lost that money. Where did that money go? Alright, so first things first, we're going to pull up this commentary. And this commentary, I think, it's pretty funny. So this is basically a little woe is me sob story about where their money's going and why they're not going to be making as much as they wish they were making. First, we expect continued headlines from both increased competition for people's time and a shift of engagement within our apps towards video services like Reels, which monetize at lower rates than Feed and Stories. So what they're basically doing is calling out TikTok. TikTok in their Reel style social media. It's stealing all of their users, and they're not happy about it. This one I really like. I'm a big fan of Apple for this. They earned some brownie points in my opinion. We will lap a period in which Apple's iOS changes were not in effect, and we anticipate modestly increasing ad targeting and measurement headwinds from platform and regulatory changes. So if you guys don't know, a few months ago, Apple made a change where third-party apps like Facebook, Google, YouTube could no longer track what you do on your phone as a whole, just what you do inside of their app. So up until this point, Facebook would see your Google searches, see your Safari searches, see your YouTube searches, and then they would use that information to get more money from advertisers. You might have noticed that you were getting ads very specific to what you were doing. Like, I'm a car guy, so every time I would search for car parts, I'd get on Facebook and I'd see, hey, buy this turbo. And advertisers were willing to pay a lot more money to put an ad on my screen that I'm highly likely to buy. But Apple put an end to that. So now Facebook can only track what you do on Facebook. So Facebook doesn't really know what my interests are, because my Facebook is just my friends, my family, and some memes. So Facebook doesn't know anymore that I'm a car guy. They're not giving me car ads, and advertisers don't want to pay a bunch of money to put some random thing that I may or may not like on my Facebook page. So it said that they were expected to lose $10 billion because of what Apple did. Like I said, Apple really earned some brownie points for me on that one, because it took a lot of balls to stand up to Facebook. Cost Facebook $10 billion to do what they think was right for its users. I think that's pretty cool. And then here you'll see, we will lap a period of strong demand in the prior year, and we're hearing from advertisers that macroeconomic challenges like cost inflation and supply chain disruptions are impacting advertiser budgets. So again, all that means is exactly what it said. Inflation is rising, and there's supply chain issues with delivering and semiconductor shortages, which means other companies don't have as much money to spend on ads and give to Facebook, which means other companies don't have as much money to spend in advertisements. They can't pay Facebook as much as they used to because they're losing profit too. And then finally, based on current exchange rates, we expect foreign currency to be a headwind to year-over-year growth, which that one's pretty self-explanatory. Money that they get from other countries isn't going to be as valuable as it once was when they convert it to USD. They're losing money in the conversion. And again, all of that to me is just a sob story. Most of that, other than inflation and supply chain disruptions, is preventable. They shouldn't have relied on stealing information from their users to make money. That's your own fault. That's nobody else's. All right, now we got one more thing that is costing Facebook a lot of money, increasingly more money every single quarter, and that is the Metaverse. So you'll see here, Reality Labs, and what Reality Labs is their Oculus Metaverse platform. So in the first quarter of 2021, they spent $1.8 billion on the Metaverse. Second quarter, $2.4 billion. Third quarter, $2.6 billion. And the fourth quarter, they spent $3.3 billion on the Metaverse. Now, like I said, in my opinion, this is a pipe dream. They know that Facebook isn't doing too hot. And rather than changing Facebook and making it more profitable, which is very possible, social media isn't dying. In my opinion, Facebook is. Rather than just fixing Facebook and making it more user-friendly and a more desirable place for the younger generations to go, they're just dumping all this money into Metaverse, which nobody knows if it's going to work or not. Now, when I say that Facebook is dying, here's what I'm talking about right here. Now, these are two separate surveys that were done, one in 2012 and one in 2021. Back in 2012, 94% of teenagers aged 12 to 17 years old had a Facebook account. Now, almost 10 years later, 2021, only 27% of teenagers say that they have Facebook. And this isn't some small survey. This is a survey of 10,000 teenagers. Now, some people might say, okay, whatever, that's nothing. But times are changing. People are getting older. So this teenage generation now, in 10 years, is going to be the 20 to 30-year-old generation. 20 years, 30 to 40. And with these dwindling numbers, we're going to start seeing Facebook users drop. And they need to change something. But instead of changing anything, they're just dumping all of their money into the metaverse and hoping that it pays off. So to summarize my opinions, now I want you guys to remember that I'm not a financial advisor, I'm not an analyst, I don't know anything. This is just my opinion. I think Facebook's dying. I really do. I don't even like Facebook. The only reason I use it is because my grandma's on Facebook and I want to see what she's up to. By the way, hi grandma. That's the only reason I use Facebook. And I think a lot of people my age in their 20s, and research shows that a lot of people in their teens feel the same way as I do. That Facebook just is not the platform for us. And they don't seem to be changing anything about it. They're just dumping all their money into the metaverse. And to be honest, I don't really want to be in the metaverse. And that just might be me. Maybe I'm a boomer at heart. I don't know. But I don't want to have something strapped to my head and be living in a virtual world. I don't want to do that. That's not how I see myself communicating with people in the future. So whether I'm buying the dip or not, I'm not buying the dip. I'm not saying Facebook's dying tomorrow, it's going to zero in the next week. But long term, I don't foresee this plan they have going working. I just don't. But that's all I got for you guys today. That is the scoop on what's happening with Facebook. Like I said, their earnings report wasn't looking too good. In my opinion, their future's not looking too great, but what do I know? If you enjoyed this video, please give it a like, please give it a comment, and please subscribe. And I will see you guys on Monday.